The world watched in disbelief as Boeing, a titan of American aviation and a symbol of industrial might, halted production on key commercial aircraft lines. The sight of idle assembly lines sent shockwaves through the global business community, raising urgent questions about the future of international trade. This wasn't due to a technical glitch or a supply chain hiccup, but a direct and calculated response to China's new wave of targeted tariffs on American aerospace products. The silence at Boeing's Everett factory signals a new kind of global conflict, one fought not with soldiers or weapons but with tariffs, trade restrictions, and economic leverage. The decision to pause production highlights the immense and growing pressure U.S. companies now face in a world where geopolitics can ground even the most powerful engines of commerce overnight. For Boeing, the stakes couldn't be higher. The global economy is holding its breath, waiting to see what happens next as uncertainty ripples through markets and boardrooms from New York to Shanghai. This is more than a business story. It's a flashpoint in the ongoing U.S. China economic struggle, a high-stakes contest that could reshape the world order. For decades, Boeing thrived on China's booming market, supplying jets to fuel the country's rapid growth. But that balance has now been shattered, leaving uncertainty in its wake. Beijing's tariffs are a deliberate strike against a high-profile American industry, signaling a willingness to absorb pain for strategic gain. The consequences are real: higher prices for airlines and travelers, American jobs at risk, and mounting pressure on global supply chains. All of this points to a shifting global balance of power, as nations reconsider alliances and economic strategies in response to the escalating standoff. Boeing's production halt isn't just a headline, it's a development that could impact families, communities, and the future of international relations, with ripple effects that may be felt for years to come. Over the next few scenes, we'll break down how we got here, what's at stake, and where this escalating trade war might lead. Stay tuned as we unravel the story behind the headlines. To truly understand today's crisis between the United States and China, we need to look back at the long and complex history that shaped their relationship. U.S. China trade began with mutual interest, not conflict. The relationship grew rapidly after President Nixon's historic 1972 visit, which opened the door to diplomatic and economic engagement. This momentum accelerated when China joined the World Trade Organization in 2001, integrating its vast market into the global economy. Boeing soon became a powerful symbol of this new partnership, selling thousands of planes to China's fast-growing airlines and helping to connect the world. China's insatiable demand for air travel promised a trillion-dollar opportunity for Boeing, making the company a vocal advocate for stable, cooperative relations between the two nations. But beneath the surface, tensions simmered over trade deficits, accusations of intellectual property theft, and barriers that limited market access for American companies. These accusations of unfair practices led to years of disputes and negotiations, gradually eroding trust and setting the stage for today's confrontation. By the late 2010s, the U.S. shifted from negotiation to imposing tariffs. China quickly retaliated and a tit-for-tat trade war erupted, affecting industries on both sides. The competition soon expanded beyond trade in goods to a fierce rivalry over technology, innovation, and global influence, with both countries vying for leadership in the industries of the future. Boeing, once a bridge between nations, found itself transformed into a pawn in a much larger geopolitical chess game, its fortunes tied to the shifting winds of diplomacy. Its high value and symbolic importance made Boeing a perfect target for retaliation, as both sides sought leverage in the escalating conflict. The era of optimism and cooperation gradually gave way to suspicion, mistrust, and open rivalry. Temporary truces and agreements were reached, but they never resolved the core issues dividing the two economic giants. Now, Boeing finds itself caught in the crossfire of a deepening economic conflict, its future uncertain as the U.S. China trade story continues to unfold. The latest escalation came fast. On July 25th, China announced new tariffs on U.S. goods, targeting agriculture, chemicals, and most crucially, aircraft and components. Tariffs of 25–50% hit Boeing's best-selling models, making them prohibitively expensive for Chinese airlines. Orders were delayed, and Boeing faced a backlog of undeliverable planes. Within days, Boeing's board called an emergency meeting and suspended production on affected lines. The industry was left reeling, with little time to prepare. U.S. officials called China's move unjustified. Beijing insisted it was defending national interests. Both sides issued firm statements, showing no sign of backing down. The global aviation industry now finds itself at the epicenter of a full-blown economic conflict. The speed and precision of China's tariffs sent a clear message. This is no longer business as usual. Boeing's crisis is a warning to all U.S. exporters. The stakes have never been higher. Boeing's leadership faced a stark choice. Building planes they couldn't deliver to China would have been financially disastrous. The production pause was an act of self-preservation, not surrender. CEO David Calhoun reassured employees, "This is temporary, and we'll use the downtime to maintain equipment and reevaluate schedules." The halt affects major plants in Washington and South Carolina, putting tens of thousands of jobs in limbo. While layoffs are avoided for now, many workers face furloughs and uncertainty. Boeing's stock plunged 15% in 2 days, reflecting deep investor anxiety. Industry groups called the situation a grave threat to U.S. aerospace leadership. Global airline executives worry about supply disruptions and rising prices. Boeing's decision is a wake-up call. The trade war is inflicting real, immediate damage on American industry. Boeing's halt ripples far beyond its own gates. Thousands of U.S. suppliers, making everything from engines to fasteners, now face dried-up orders and existential threats. Many are highly specialized. If they close, critical skills and knowledge could be lost forever. The economic pain spreads to entire communities, threatening local businesses and government services. Furloughs mean less spending, lower property values, and a cycle of hardship. Meanwhile, Airbus stands ready to fill the gap, with Chinese airlines likely to shift orders to Europe. This could permanently alter the global aviation landscape, handing a strategic advantage to Airbus. The trade dispute, meant to protect U.S. interests, may end up strengthening America's rivals. The stakes extend far beyond Boeing. What do the experts say? As the crisis unfolds, leading voices from economics, industry, and academia are weighing in with urgent warnings and thoughtful analysis. Dr. Evelyn Reed of the Peterson Institute calls this a classic case of tariffs backfiring, hurting U.S. workers and supply chains more than China. She points out that American manufacturers are already feeling the pinch, with layoffs and production delays rippling through the economy. Without a quick diplomatic solution, she warns, the crisis could trigger a broader economic slowdown, affecting not just the U.S. and China, but also global markets and everyday consumers. Aerospace consultant Richard Abulafia highlights the risk. Boeing's unreliability could push China to accelerate its own aircraft industry, like the Comac C919. He notes that this could permanently shift the balance of power in the global aviation market. A prolonged absence could give China's homegrown competitors the time they need to catch up, and even surpass, established Western players in innovation and market share. Dr. Chen Wei of Tsinghua University predicts companies will rethink global supply chains, moving toward regionalization to avoid future shocks. He suggests that businesses may invest more in local partnerships and diversify suppliers to reduce risk. This shift could make supply chains more resilient, but also more expensive, raising prices for everyone. Consumers may soon notice higher costs on everyday goods, from electronics to groceries. The consensus: escalation means everyone loses. Both economies are deeply intertwined, and further conflict only deepens the pain on both sides. The only way forward is de-escalation and renewed negotiation. Experts agree that dialogue and compromise are essential to prevent lasting damage. Both sides must pause retaliatory measures to create space for dialogue, allowing cooler heads to prevail and solutions to emerge. The future of Boeing and the global trading system hangs in the balance. The outcome will shape international business for years to come. The stakes are enormous, and the window for action is closing. The world is watching, waiting to see if leaders can rise to the challenge before it's too late. The numbers tell the story. Nearly a quarter of Boeing's 2024 deliveries were bound for China, its single largest international market. Losing access is a fundamental threat to Boeing's business model. A line graph shows Boeing's stock plunging after the tariff announcement, erasing billions in value. A map of Boeing's 12,000 U.S. suppliers reveals the pain is nationwide, not just in Washington. Each dot is a company facing layoffs and uncertainty. This is a national crisis, not just a Boeing problem. A chart comparing Boeing and Airbus's order books shows Airbus surging ahead as Boeing flatlines. The visuals make it clear, this is a direct transfer of market share from the U.S. to Europe. The consequences of this trade war are visible, measurable, and profound. The data is a stark warning of what's at stake. At its core, this story is about people. For workers in places like Everett, a Boeing job is more than a paycheck. It's a legacy and a lifeline. Furloughs have cast a shadow of uncertainty over families, forcing tough choices about mortgages and futures. One third-generation mechanic put it simply, "We've weathered strikes and downturns, but this feels different. We're pawns in a political game." The anxiety is real, and the impact extends to the next generation. Local colleges training future aerospace workers now face declining enrollment as students question the industry's stability. This could create a long-term skills gap, hurting innovation and competitiveness even after the crisis ends. The human cost is the most urgent reason for a swift resolution. Trade policy isn't just about numbers, it's about families and communities. Leadership must prioritize people over politics. Boeing's silent assembly lines are a symbol of a fractured global order. If tariffs persist, the damage to Boeing, its supply chain, and the U.S. economy will deepen, and market share may be lost for good. This is a critical moment for calm, strategic leadership and renewed diplomacy. The issues, intellectual property, market access, subsidies are complex, but punitive tariffs are a self-defeating strategy. The path forward is targeted negotiation and international cooperation, not escalation. Staying informed is the first step to engagement and accountability. This isn't a partisan issue, it's about America's economic security and global standing. The world is watching. Will this be a cautionary tale or a turning point toward a more stable trading system? The engines are quiet, but the call for action has never been louder.